Ladies and gentlemen, good day and welcome to Q1 FY23 earnings conference call, TTK Prestige, hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on the touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vidisha Sheth from Ambit Capital. Thank you, and over to you, Ms. Sheth.
Hello, everyone. Welcome to the Q1 FY23 earnings call of TTK Prestige Limited. From the management, we have with us Mr. Chandru Kalro, Managing Director, Mr. K. Shankaran, Whole-Time Director, and Mr. R. Saranan, Chief Financial Officer. Thank you, and over to you, sir, for your opening remarks.
Thank you. Good afternoon, everybody, and thank you for joining us on the earnings call. We've had quite a good quarter, a very satisfactory quarter considering the kind of headwinds that were there in the quarter. It has been volatile in terms of commodity, in terms of market, inflation, etc. And all told, I think we've done extremely well. Our volume growths are robust, our value growths are robust, our margins are good, and we're looking at a fairly stable situation going forward as well. And all geographies have done well, all channels have done well, and all categories have done well. I stand by for your questions from here.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bharat Chhoda from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. I had a query regarding our revenue momentum. Last year, the Q2 was a very high base. So do you expect the revenue to be positive from that level, or probably we would say a marginal decline? How would the revenue move from there, if you could throw some light on that?
Absolutely, you're right. We are on a very high base as far as Q2 of last year is concerned. Q2 of last year was high because there was a truncated Q1. There was some level of pent-up demand as well, and therefore the base was quite high. We are looking at overhauling that slightly, but not by much. If things go well, I think we should overhaul it as we speak. Okay.
And sir, one more thing, in the press release, we have said that probably the commodity inflation is easing out, but there are other items, inflationary items, which is a cause of concern. So what are these items we are referring to here? Is it shipping, freight cost, or anything else specific you want to call out over there?
Yeah, the freight costs haven't come down because the oil prices haven't really come down in terms of marketplace. There are some commodities that haven't come down. For example, rubber, whichever is oil-based, that hasn't come down. So paper hasn't come down fully to where it was. So there are still some areas. However, the good news is it's not going up anymore. So I think from here on, we're looking at some kind of stability in pricing in terms of our raw material, which is good news. And I must also add that nothing has gone haywire in terms of our planned raw material prices that we had looked at the beginning and where they are now. So we are at where we have a plan. So in that sense, there are no surprises.
Yeah, that's it from my side. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Naveen Trivedi from HDFC Securities. Please go ahead.
Yeah, hi, good afternoon, everyone. Sir, my first question is, can you just share what sort of price hike have you taken in the quarter, and what sort of price actions are expected considering the RM side we are seeing softening?
So there was no major price hike that we took in this quarter, but for a few items in this quarter, and that would you can say range between 3 and 5% over a few categories. These few categories would be induction cooktops, where, for example, some key components went up in price because they were imported. Otherwise, we had announced the pricing in the end of fourth quarter, which is what we took in. Going forward, we are looking at and when we took these price hikes, whatever price hikes we took, we did not exactly take the spot rates into account, but we took an average rate that we had in mind when we took it. And I think we are at that average position. So there are no price hikes planned, and I don't think we are looking at any price reductions either. So there is a stable pricing regime which we are looking for.
You mentioned that the volume side also you have seen a decent amount of traction in this quarter also and the previous quarters also. How should we look at volume trajectory going ahead, considering the demand scenario you expect in the coming quarters?
So, in terms of trend, I mean, the inflationary pressure is well known to you. So the trend that we are seeing is that the mass end or the entry level end is struggling for volumes. The upper end, which is the premium end or the niche end, is not struggling for volumes. Growths are there. So in that sense, if you look at an overall volume picture, the volume picture is not positive. But since we've launched so many new innovative products in the Q1 also, we're expecting that our volume is stable, if not marginally growing on a large base of last year. That's where we're looking at the volume outlook.
Considering a lot of consumer companies are talking about demand slowing down, and now price side also, there will be more, I would say, not taking cuts, but still there won't be any price element which will drive the revenue side, and thereby the volume traction seems to be very important in terms of understanding the revenue trajectory going ahead. That's why I was trying to understand how volume trajectory will be there in the coming quarters.
So as far as Q2 is concerned, I already answered you. I am seeing the second half being more positive than the Q2 because our second half base was reasonably stable last year. So I'm expecting growth to happen in the second half. And therefore, overall for the year, we will look at reasonable growth in volumes as well.
You can't compare our company with FMCG. We are in brown goods, not in white goods also.
I missed out a comment on for the second quarter. You mentioned that there will be some slide in the on a YOY basis, correct?
A few categories, but many categories we are looking at growth as well. So at the upper end premium categories, we are looking at growth. At the mass end, we are not looking at growth. Maybe a little bit minus there.
Sure. And considering in this environment also, sequential gross margins have improved this quarter. So on that basis, and the RM side, we are seeing some softening. So how should we look at gross margin trajectory in the coming quarters, particularly when the festive season side, it will start benefiting the second quarter instead of third quarter this time?
Good question. Yes, the gross margins have improved on a sequential basis. But remember that there is some inventory which we are holding at a higher cost. So the entire benefit of the softening commodities will not happen in Q2. They will happen from Q3 onwards. But yes, we are looking at a decent situation in the gross margin front going forward.
Sure, that's all from my side as of now. Thank you so much.
Thank you.
Thank you. The next question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hi, good afternoon. Thank you for the opportunity and congratulations on a stable set of numbers. A few questions. So you mentioned that your growth is 38% on sales over a normal base of 1Q FY20. If I were to, split it between value and volume, what would be the ballpark, breakdown of this?
See, we are a multi-category company. So our growths have been, in the volume terms, if you look at on most categories at a double-digit CAGR from that time to now, even if you include the COVID years, in many of our major categories. Some categories, maybe it's a single-digit growth. But there is volume growth across categories in between the Q1 of FY20, which was the last normal Q1, to this Q1.
Sure, this is helpful. Now, my second question is, you had a target of 5,000 crore of revenue by 25. So, any update on that? How are we looking at any inorganic expansion or any change in that guidance yet?
So that guidance, if you remember, we had given for FY25 in the year FY20, and then we said that the COVID year will put us back by 2 years. So we pushed that deadline to 26, 27. And that guidance of 5,000 crores, if you recall, was 1,000 crores inorganic and 500 crores export and 3,500 crores in the existing portfolio. And I think we are on course to achieve those other than the inorganic, because while inorganic proposals are under consideration, we don't have anything to report back other than what we've already told you.
Sure, this is helpful. My last question is on the other expenses for this quarter, which has seen a significant jump up. Anything to note over there? Is A&P spend unusually high, or anything that would normalize in the following quarter?
So actually, the A&P spends of last year Q1 were a little lower than normal. And what you are seeing this year in Q1 is a normalized A&P spend. That is one. Second thing is, over last year, if you see, last year the traveling expenses and other business expenses were slightly lower. This year we've had a largely normal quarter. So in percentage terms, we are still fine. There's nothing wrong with what we have, and it's a normalized expenditure that you're likely to see. Nothing out of the ordinary.
All right. Thank you so much for your answers. That's all from my side.
Thank you. The next question is from the line of Ranjit Shivram from Mahindra Mutual Fund. Please go ahead.
Yeah, hi sir. Congrats on good set of numbers. Just wanted to understand now that this.
Hello?
Sorry. Am I audible?
Yes, now you are audible. Yes.
Yeah. So now that this Crompton has acquired Butterfly and it's almost a month, and do you see more competition from Butterfly, and are they taking market share from us in the northern region with the reach of Crompton? Is there any threat to us in terms of market share loss?
No, I won't say threat, but I certainly think that there would be a credible competitor in the non-south from here on, which I believe we are more than happy to face in these markets. The jury is out on how much they would sustain their presence, but they certainly become more active in the market. There's no doubt about it. But more competition is only good, because I believe that it will spur us on better.
Okay, and also Crompton is planning to launch his in kitchen in terms of the chimneys and other equipments also, where we are kind of it's not non-premium player. No, the premium is Sabre and Alicia, and we are the second rung. So there, if Crompton is coming up with these products, do you see more challenges for us?
See, first of all, that end of the business is very small for us. You are aware about that. Secondly, I think the investment we've made in Ultrafresh gives us a significant edge for that end of the business, because you know that Ultrafresh has already 89 studios of theirs where they're selling kitchens, and they're all going to be selling prestige kitchen hoods and cooktops in these 89 stores, which gives us a straight off ready-made launch pad, while they will have to build that store base. So in that sense, we are talking to a customer who is making their kitchen, and at the same, that is the time when they're likely to buy these kind of items. So I think we are very well placed. The investment in Ultrafresh will be more than adequate to actually grow the business rather than defend. I believe we will be aggressors very soon, and therefore I think this category will become very important to us. We've also got new products coming in that category, wherein we will address the issue of being second rung instead of the mainline players. Hopefully, in the next couple of years, we shall be able to achieve that.
Okay, and sir, lastly, if I separate the standalone from Concall, it's a loss this quarter. So anything in that, if you can throw some light?
Oh yes, the UK markets have been less than happy in the last one quarter, as you can see, and therefore there has been a significant drop in their top line, reducing their operating leverage. Their gross margins are good, but unfortunately, because the operating leverage coming down, they've actually shown a loss. And there is also an exchange adjustment that has come in the consolidated, which is causing that significant drop. Exchange adjustment, I think, is a one-time. I don't think
it is notional. It's not.
That's very notional. Going forward, the operations, I think we will need a quarter or so to see how the UK economy will do. There are a lot of good things that they have done in the meantime to address growth and top line. We've just launched the product in the US for the first time, and they're going to sell online there. So hopefully that will be a new channel for growth. They're also listing in the EU markets for listing their brands for online sales there. That could be another channel for growth, so that they're less, or they're not, right now they're completely dependent on UK and Ireland. They're kind of getting new geographies to hedge that. But how much of this will come into play, I think we need a couple of quarters to see.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Yeah, sir, one question on the phasing out of price hikes. So, what is the total price hike for this quarter? Means not taken in this quarter particularly, but the price hikes taken in earlier quarter. What will be total price hikes effective in Q2, Q3, and by Q4? That is one question. And second is on Horwood. So basically, Horwood has remained in investment mode, and even in this quarter also, the profitability is a bit actually adverse. So how do you see the outlook, and considering the likely recession in developed countries, Europe, UK, etc. So how do we see turning that business into a profitable, that is generating positive EVA, higher than cost of capital, ROC? Yeah.
So let me first answer your Horwood question. The Horwood has not been in investment mode all this while. Yes, most of the time since we acquired it. Last year, for example, Horwood turned around a fantastic performance. The last financial year, if you look at Horwood's performance, they have had a steady growth, both in top line and bottom line. This time around in the Q1, they've had a serious headwinds because of what everybody knows. There's been a food inflation, there's been an energy inflation, there's been an overall downturn in the UK economy, which is what is causing this. So these are factors beyond our control. The point is, what is in their control, they are doing enough, we believe, to expand their base of customers, to expand the number of. I believe that even now, relatively speaking, over their peers in their market, they will probably be performing better. So that is on the Horwood story. On the realization story, the price increase story, it's difficult to answer that question fully because, you see, what realizations we get are a function of channel mix, model mix, and all of those. So if you look at the actual price increases that we took, depending on the category, we have taken close to 8 to 10% in pressure cookers and cookware. We've taken 12 to 15% in some parts of the appliances, and in some appliances we've taken in single digits also. So overall, if you have to extrapolate net of inflation, what is the price increase, or it is difficult, but I would say between 8 and 9% is what you are looking at price increase. But it varies depending on the model mix and the channel mix.
Okay. Sure, sir. Understood.
Thank you. The next question is from the line of Adi Jain from Ampersand Capital. Please go ahead.
Yeah. Hi, sir. My question is that in this quarter, while your gross margin has improved, on a sequential basis, your EBITDA margin has gone down because of your other expenses. Was there any particular advertisement related or any particular thing that you would like to flag out?
EBITDA margins have gone down with respect to what?
This March quarter.
No, you must not look at a sequential quarter performance because ours is a very seasonal business. You have to look at it on a Y-on-Y basis. If you look at it on a Y-on-Y basis, there is an increase in margin in EBITDA. And so therefore, I wouldn't look at it sequentially because there are several things that come into play between Q4 and Q1 and they're not really comparable, not in our business at least.
We have been maintaining that if you take a moving 12-month period, we'll be able to maintain our margins of 15%, plus or minus 1%. That's what we are adhering to.
15%, 1/5.
Yeah, we are closer to that.
Okay. Because your March quarter, the financial year 22, where the raw material costs were so elevated, your EBITDA margin was somewhere around 17%.
Yeah, but then it's a question of a combination of other expenses and other things like that in the Q4.
The timing of these expenses vary from quarter to quarter, and we are not here to look at the numbers for every quarter. We are looking at a stable 12-month period and take our decisions accordingly. The spends will vary. Therefore, as a veteran analyst, I would rather look at what is my moving gross margin and EBITDA margin. If it stays within the range of plus or minus 1%, I'm actually on the top. I'm not losing anything.
Understood, sir. So, what you're saying is that your full year margin is going to be lower than last financial year.
That is what we said because of the commodity pricing, right, at that point in time.
Understood. And some the other question that I wanted to ask is that that while you were talking about a bit of a higher base for Q2 where the growth will be subdued, but you were saying that your second half will be much better. So the overall full year, are you looking at healthy double-digit growth then?
Of course, yes, definitely.
Okay. And this is despite the fact that what you are facing in exports and in your international subsidiary.
Yes.
Yes. Actually, if I can just ask last question that you have done these acquisitions and you're trying to foray into this modular kitchen and all that. Can we just see some more action in terms of your inorganic initiative to something related or something very different than what you are doing now?
We are moving around with the cart. We haven't added anything into it.
Understood. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir, and thanks for taking my question. I have one, but it's slightly long, so kindly bear with me. So basically what I'm thinking is that in COVID times, we saw little tailwinds for our business. There was extra demand for kitchen equipment, people spending more time at home, cooking at home, and there were share gains from organized. Given now that we are latching on these in the bases, also kitchenwares are now renewed for these kitchens, and that renewal or replacement demand will only come maybe 4 or 5 years later. And plus there is added inflation and volumes in the mass end are under pressure. So how confident are we of delivering a double-digit growth rate in second half and beyond? Is it contingent on the overall consumption environment picking up, or we are confident on our own efforts in distribution expansion, etc. Any details you can share on that front, non-south versus south, would be helpful.
See, the market, according to what we see, we are confident of doing what we just said, which is having a healthy double-digit growth. I believe that we can do what is in our control and we have to manage what is not in our control. And what we believe is we don't believe any catastrophe is likely to happen. Hopefully I'm right. Hopefully nothing wrong happens to India. And in that sense, we will be the industry-leading growth rate even now, I believe. We will continue to innovate and continue to launch many products and continue in our efforts of marketing and branding and customer-centric innovation. And that's what gives us the confidence. Beyond that, whether in spite of everything will I grow, I think it will be arrogant on my part to say yes.
We believe that the external factors will not get what they want is now. So given the current situation, we believe we'll be able to hit the double-digit mark for the current year.
And this growth that we are targeting is largely going to be led by entering newer markets, getting more consumers into the TTK Prestige foray. Is that understanding correct?
These are strategy issues. I can only tell you that we are cognizant of the fact that the inflation hits a certain section of the society, and certain section of the society is relatively immune to this inflation. And I believe that forms part of our marketing strategy and our product strategy and our channel strategy. There is a constant effort to expand on our distribution and channel dominance in various parts of the country, which is continuous process. There is no such thing as tomorrow morning everything is done. It's a continuous journey, and that we are embarking on. Therefore, I believe that we will have better growth rates as we go along.
Just one follow-up, sir. Can you give a split of your South versus non-South revenue split?
More or less equal. It remains around 50-50, plus or minus 2%, depending upon the season and quarter.
Got it. 50-50 it is. Okay.
Yeah.
Thanks, sir. That's all from me. All the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is on the line of Digant Haria from Green Edge Wealth. Please go ahead. Digant Haria, your line has been unmuted. Please go ahead with the question.
Hello?
We cannot hear you, sir. Yes, now we can hear you. Sorry, we lost this line again. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Digant Haria from Green Edge Wealth. Please go ahead.
Yeah, sir. Am I audible?
Yes.
Yeah, sir. We have, constantly highlighted it. There is, the high-end products are doing well, and, the entry range products are not doing well because that segment has been hit initially by COVID and now by inflation. So in that entry level segment, are there any green shoots at all in any channels? Like, say if there were good monsoon, good crop in the last winter season, like is rural doing a little better, or it's uniformly that is one segment which is not doing well?
No, I think the green shoots are there because I think the food inflation has abated. That pressure is going off. Monsoons are slated to be good, so I'm hoping that the second half of the year is good, which is what I've stated. And we have an added push on our lower end brand, which is Judge, which we are at this moment expanding on distribution. But clearly that is very much smaller than Prestige to be of any significance, but I think we don't want to lose sight of customer. So all of this put together, I believe that we are seeing something. But having said that, at this moment, when we say that the lower end is hurt by inflation, it's not as if there's a disastrous situation there. It's a lack of growth or a slight degrowth in those segments, while there is a growth in the upper end segment. That is where it is. So in overall category sense, the volumes are still very steady.
Right, sir. Sir, and before COVID, we used to, or maybe before COVID, we used to do some sales through these microfinance companies also, which were primarily in rural areas. Now, have they started? Because I think that sector has started disbursing and doing well in the last 6 months.
Yes, that segment is quite active, both in Q4 of last year and Q1 of this year. That segment has been quite active.
Okay, sir. That's it from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Naveen Reddy from HDFC Securities. Please go ahead.
Can you just share the mix of entry level and the premium for our business?
I don't think I would like to share that part of the business. I believe that is competitive sensitive information.
But any ballpark number from the industry point of view?
See, it depends on which category you are speaking of. It depends on which geography you are speaking of, etc., etc. There are categories where the mass end is 70% and the upper end is 30%. There are categories where it is 60-40. So it is a category-specific trend.
Sure, sir, sure. And lastly, on the margin side, so I'm not picking you for any quarter-specific thing, but on a sustainably, how do you look at your EBITDA margin in the medium-term sort of a point of view, considering a lot of cost has been restoring, like traveling and other expenses, while on the RM side we are also seeing softening. And the third angle is we are seeing some sort of volume pressure from the external environment point of view. So in that context, how do you think that your EBITDA margin on an yearly basis are sustainable?
Like Mr. Shankaran said, I mean, a 15% EBITDA plus minus 1.25% is what is there. We're not looking at minus from 15 at this point in time. We're very confident of delivering that 15. Last year we were at 17.4%. I believe that given that last year was a very benign commodity situation, and like you correctly said, in other expenses, there were lower expenses. I believe that within a 1% band of that, we should be able to deliver. But giving a guidance on EBITDA in these times is something that one has to be very careful about. But I think we're fairly confident that the margin structure is robust in the company. We're doing everything to make sure that we are stable and deliver that kind of margin constantly.
Yeah, sure, sir. Thank you so much.
Thank you. The next question is from the line of Patanjali Srinivasan from Ramirez Investment Trust. Please go ahead. Patanjali Srinivasan from Investment Trust. The line has been unmuted. Request you to please go ahead with your question.
Yes. Hello, am I audible?
Yes, you are, but I request you to speak a bit louder. Your voice is quite low.
Okay, yeah. Sir, hi sir. What is the A&P spend that we are doing right now as a percentage of our top line?
A&P spend.
Yes.
Around 6 to 6.5% depending on which quarter you're looking at.
Okay, sir. And what is our e-com sales like as a percentage of sales?
It's around 15 odd percent.
So how has this changed compared to the period like where in COVID most of the channels were shut for physical purchase and all, and how much of it has stayed back, and what is our view on this? Can this go up further from here?
So you have answered the question yourself. Last year the markets were closed. This year the offline markets are open, and I believe that people have come back in a big way to go and shop offline as compared to online. And therefore, that has happened. And I believe that going forward, the trend on online shopping would be between 15 and 22% is what we believe is that is the kind of trend that we are looking at.
So our own view is that our touch and feel customers still prefer doing that more than buying it online. Is that right?
In this quarter, definitely we have seen them come back in a big way in the offline segment. That's what we are seeing. Last year, of course, they had no option. Last year, they had to buy only online because the markets were closed.
Okay, sir. Sir, and just like a similar question what a previous analyst had asked. So this mass market and premium, like I don't want a number or something, but from an SKU perspective, what is our SKU mix like for mass market products and premium products?
We are well segmented in every single major category of ours. We have products in each and every price segment, and in fact, you are looking at it as two segments. In many categories, we look at it as 4 segments, 5 segments, depending on which way we are talking about. So, it's difficult to say how many SKUs we have in which segment. You can be very confident that we are well represented in all segments.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rushabh Sharedalal from Equirus PMS. Please go ahead. Rishabh Sharedalal from Equirus CMS. Please go ahead with your question.
Hello. Am I audible?
Yes, sir, we can hear you.
Yeah. Thanks for the opportunity. Just wanted a small clarification that you said that the revenue guidance, so it'll be a 15% growth from H2, right? Did I get that correctly?
We said we will have a healthy double-digit growth for the H2.
Right. And just another small clarification that I needed. So this 5,000 crore revenue target has been pushed back from FY25 to FY27. Did I also get that correctly, or am I mistaken?
Correct. That COVID has pushed us back by 2 years.
Okay. Fine. Okay. Yeah. Thanks.
Thank you. The next question is from the line of Akash Padia from Yes Securities. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. So what will be our capex plan for FY23 and where it would channel?
What was the second part of the question? You wanted capex for FY23 and the second part?
And for which products we will be using that capex largely for?
So our capex for this FY23, and I'm not taking into account any capex which was carried forward from last year, is about 120 crores. And I believe that kind of money would be spent this year on capex. The capex is on various parts of the company. We are embarking on a huge retail expansion on a company-owned franchisee-operated mode. There is also capacity expansion in manufacturing. There's a lot of automation that we are planning in manufacturing to maximize machine utilization, quality improvement, reduce costs, etc. So all of these put together is where this kind of money is being spent. The capacities are being expanded in pressure cookers and cookware both.
Okay, thanks a lot, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. Anyone who would like to ask a question, you may press star and 1. A reminder to all participants, you may press star and 1 to ask a question. Anyone who would like to ask a question, you may press star and 1. As there are no further questions I now hand the conference over to the management for closing comments.
Thank you everyone for coming to the call. As I said, we've had a good quarter, and I believe that we are well on course to a good year ahead as we go along, and things are looking all right. There are some headwinds, without doubt. There are some small issues, but I believe that there's nothing that we haven't planned for or ready to face. We are competitive. We have many new products for the coming period of the year, and we believe that we will end the year in a good way. Thank you very much.
Thank you.
Thank you. On behalf of Ambit Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your line.